A surge in jobs last month can't stop the unemployment rate from rising. Billionaire Andrew Forrest dumps his 2030 hydrogen energy goals. And a record price for a dinosaur skeleton. $45 million for a stegosaurus known as Apex. Welcome to Fear and Greed, daily business news for people who make their own decisions. It's Friday, the 19th of July, 2024. I'm Julian King, and good morning, Sean Aylmer.
Good morning, Julian. It's your last day filling in for Michael. Have you enjoyed it?
I wish the carnival wasn't over, Sean. I have, but as I said earlier in the week, Michael is welcome to the early morning starts.
That's true. That's true, but it's been fun.
It has been enormous fun. And speaking of mornings, the main story this morning, the economy added 50,000 new jobs last month, well above expectations, but triggering fears of an interest rate hike next month.
Yeah, so the number was 50,200. That's how many people found work last month, mostly in full-time jobs, according to the Australian Bureau of Statistics. But that didn't stop the unemployment rate rising to 4.1% from 4% in May. The ongoing surge in foreign arrivals pushing more people into the labour market. Now, that means the participation rate, which is the proportion of people working or looking for a job, jumped to a near record high of 66.9%. That's actually why we ended up with a higher unemployment rate, even though we got a stack of new jobs. The number of hours worked rose by nearly 1% in June, but the Bureau said more people than usual were unwell during the month, though this was somewhat offset by fewer people taking annual leave. Economists tend to talk plenty about the number of jobs in the first few days after the release, but then it's really about the unemployment rate, which is a pretty good indicator of the overall jobs market. While it's now back up to the level of January this year, it is still well below the 5% plus levels pre-pandemic. The labour market is probably loosening up a bit, Julian, but it still remains pretty tight.
Okay, so given these numbers, what does that mean for interest rates?
Well, bond investors immediately priced in a greater chance of a rate rise in August when the Reserve Bank board next meets. They now ascribe a 20% chance of a rate hike in August and 30% chance of one in September. That's assuming there isn't one in August. They'll give a 30% chance for September. But the data yesterday was a bit confusing, not least because there was a big jump in jobs as well as a lift in the unemployment rate. The leading indicators of the labour market, think job vacancies, job advertisements, business hiring intentions, they've been signalling a slowdown in jobs growth since late 2022. That trend continues in those data points, but it really hasn't happened in terms of the official labour force stats, or if it has, it's only happened at the margins. Most economists still think the jobs market is softening a bit, but certainly yesterday's figures give no reason for the Reserve Bank to think it shouldn't hike rates if inflation continues to print above the target band of 2 to 3%. Now, the June quarter CPI data is due for release on July 31. That's when it becomes much clearer about whether there'll be another rate hike in Australia or not. Certainly yesterday's data, while it doesn't necessarily argue that there should be a rate hike, there's nothing in it that causes the Reserve Bank to stop having a rate hike if that's what it wants to do.
Okay, how did local markets perform yesterday?
Well, S&P ASX 200 closed down 0.3% to 8,037 points on the back of a sell-off in tech stocks. That was precipitated by a tumble on Wall Street. More on that shortly. WiseTech Global led the tech stocks lower, falling 6.6%. While data center operator NextDC tumbled nearly 5%. The tech index of the ASX 200 at the end of the day was down about 3.4%. The telco index, which mostly reflects Telstra, was down more than 1%, but otherwise there really wasn't much movement on the bourse. Among the large caps, the banks were mixed, the big miners were lower and the retailers generally higher. CSL and Goodman Group both closed up more than 1%. In corporate news, yesterday, Telix Pharmaceuticals share price dropped nearly 3% in heavy trading, after it had earlier in the day hit a record high on strong quarterly sales and upgraded earnings guidance. And Evolution Mining rose about 3% after flagging a jump in gold production during the last quarter.
And Sean, immediately after today's show, you've got a good chat with John Howie. He's the CEO of Stake.
Yeah, it's really interesting. Stake is this great platform where it has lots of data on what people are buying and selling. So we talk about exactly, what people are investing in. These are retail investors. And significantly, that people are still investing, notwithstanding the cost of living crisis and that. People are still putting money into the market. ETFs are a favourite at the moment and a bunch of the US tech stocks. So it's a great chat all about that.
And that is coming up after the show. On to international markets now. Thanks to Blue Chip Communication, the experts helping financial services companies market, communicate and grow. Visit bluechipcommunication.com.au. What's happening there?
Well, tech stocks globally are running into a few headwinds, with the strongest being US-China relations. The US has proposed to increase trade restrictions on sales of advanced semiconductor technology to China. That sent the Nasdaq down nearly 3%. Some big-name tech stocks got caught up in the selling. Nvidia's share price fell 6.6%. By the close yesterday morning, Apple was down 2.5%, Microsoft was off 1.3%. Asian technology stocks also fell. Now, the biggest Japanese chip maker, a group called Tokyo Electron, it fell 11% on that news yesterday. Away from equities, Brent crude's fetching just under $86 a barrel. Gold is creeping towards $2,500 an ounce. Iron ore is steady. Bitcoin's trading just under $65,000 a unit, and the Aussie dollar is fetching 67.4 US cents.
Yeah, clear the Biden administration is attempting at cracking down, Sean, on China's chip-making business, I think, in the hopes of trying to boost their local market.
Yeah, I think so. I mean, it's become a political story as much as it has an economic story on that one.
Right. We'll be back in a moment with the rest of the day's business news. The ACTU sent its staff home fearing for their safety after it announced that it would suspend the CFMEU from the peak body until it can show it is free of criminal elements.
Media reports say ACTU management were concerned about the safety risk to staff if the headquarters was picketed by CFMEU construction workers angry at the suspension. Now, in New South Wales, Premier Chris Minns launched an investigation into wage deals that state CFMEU boss Darren Greenfield signed off on for major government projects. It came as the leader of the CFMEU in the Queensland branch doubled down on his attacks on the Prime Minister after the Albanese government placed the branch under the control of an administrator. State Secretary Michael Ravbar, who also serves as the union's national vice president, accused Anthony Albanese of blindsiding thousands of blue-collar workers. Also yesterday, Labor's national executive said it will sever ties with the CFMEU following similar moves by several state governments.
Now, Domino's share price fell 8% yesterday, the worst of the top 200, after it said it will close stores in France and Japan as it downgraded earnings guidance.
The pizza group will close nearly 10% of stores in the two countries, and yesterday it said that its long-term target of 7,100 stores globally by 2033 won't be achieved. Currently, it operates in 12 markets with more than 3,800 stores. Domino's has always been very aggressive about its expansion plans, initially in Australia, then internationally. And while the company says it still plans to double the number of its stores, management is now focused more on profitability and sustainable organic growth. Domino's has 1,015 stores in Japan. It's going to close 80 loss-making outlets. It has 482 outlets in France. It'll close 30 stores.
I get spammed relentlessly by Domino's on my phone, Sean.
Yeah, they are ferocious.
Oh, they are. It's enough to make me want to go to their rival, I must say.
Ah, interesting.
Billionaire Andrew Forrest has dumped ambitious green hydrogen targets, restructuring his company Fortescue with 700 jobs set to go.
Dr. Forrest and Fortescue have been talking up hydrogen power for about 6 years, and the about face could also hinder Australia's efforts to reduce carbon emissions. Dr. Forrest has pulled back from the company's goal of producing 15 million tonnes of green hydrogen by the year 2030. Now, as part of the redundancy round, some senior managers are expected to depart as well, including from within the group's iron ore division. Dr. Forrest said low-carbon green hydrogen still had a bright future, but his immediate focus would shift to renewable electricity. The decision by Fortescue could hurt the federal government's emissions transition plan. Canberra has provided or is providing $8 billion in investment and support for hydrogen production. Fortescue's share price fell 1.5% yesterday.
It's as though the world, Sean, isn't quite ready for hydrogen yet, like not developing at the rate at which they'd hoped.
Yeah, the technology just isn't there yet, and it's good for very heavy vehicles. Well, supposedly it should be good for very heavy vehicles, but even on that side of things, it's just not there yet.
Retailer Accent Group said that it will close 17 glue stores due to a weak performance from the youth fashion brand.
Chief Executive Daniel Agostinelli said trading conditions had improved across the group, which includes 34 brands and stores, including Nude Lucy, The Athlete's Foot and Platypus. But he said the decision to exit 17 underperforming stores, leaving 17 stores still open, plus the digital operations, will allow Glue management to focus on profitable outlets. And staying in retail, candles and fragrances retailer Dusk, one of my personal favourites, Julian. It says its sales growth improved over the second half thanks to more successful promotions and a better performance by its online channel. However, sales for the full financial year are expected to be down by 8%. Now, I've got to tell you about Dusk. Do you know why I like Dusk?
Why do you like Dusk?
Because you walk past and the smell of that store is just phenomenal. I have no idea how people work there all day and have to put up with that smell. But I do like the idea that you just walk past it, and I don't think I've ever been into one, or maybe I probably have actually, but it's just the smell of it. How can you not like it?
You know how they say before you sell a house, you should bake a loaf of bread?
Yes.
Perhaps go to Dusk and light a few of those frangipani candles.
Yeah, maybe it's the equivalent of.
I think I'll choose the bread.
Yeah.
Okay, now buy now, pay later group Zipco wants to introduce a Pay 8 product to allow customers to pay for more expensive items such as travel and white goods.
Zip is focused on its 3.8 million American customers and over recent days has raised money from investors to eliminate some of its debt. Now, the group, which is currently under investigation in the US over whether it violated consumer protection laws, wants to accelerate its growth in the world's biggest economy. And part of that plan is the 8 payments rather than 4 payment strategy, according to media reports, including the Financial Review. Zip is forecast to announce core earnings for the last financial year of around $68 million, which is a turnaround from a loss the previous financial year. In Australia, it has 2.2 million customers, but the value of transactions last quarter was actually down 11%. Anyway, good luck to it.
To international news now, Donald Trump appeared overnight at the Republican National Convention with a typically firebrand speech, but much of the interest over the last few days has been around the performance of his vice presidential nominee, J.D. Vance.
After formally accepting his nomination, Mr. Vance railed against Wall Street and corporate America, putting economic populism at the centre of the campaign. The 39-year-old spoke of his impoverished upbringing and said Donald Trump's Make America Great Again movement was the champion of American workers. In his speech, he was anti-trade. He also said he opposed the US giving more aid to Ukraine. He's very entertaining to watch. I don't know how much he's adding to the debate, but wow, it's going to be a fun 4 or 5 months until we get to that election.
It won't be boring, whatever you think of US politics. Meanwhile, the pressure builds on Joe Biden to step down as the Democrat nominee for the November election. 2
very senior Democrats, Senate Majority Leader Chuck Schumer and House Minority Leader Hakeem Jeffries, have told Mr. Biden that his continued candidacy imperils the Democratic Party's chances in the election, according to a bunch of news reports. A White House spokesperson said that the president told both leaders he is the nominee of the party, he plans to win, and looks forward to working with both of them to pass his 100 days agenda to help working families. There have also been polls out saying the majority of Democrat voters want Mr. Biden to step down. Meanwhile, Mr. Biden yesterday tested positive for COVID, cancelling an event in Las Vegas. He said he's feeling good with only mild symptoms.
Well, the US president at 81 years of age, Sean, has harshly been referred to by some as a dinosaur. And speaking of dinosaurs, Ken Griffin, the founder of the massive Citadel hedge fund, has paid US $44.6 million for a 150-million-year-old stegosaurus known as Apex, making it the most valuable fossil ever sold at auction. Nice to have that sort of disposable income.
What a great story. The fossil is 3.35 metres tall, 8.2 metres long. The price surpassed its pre-sale low estimate by about 11 times, according to Sotheby's. Now, the Financial Times is reporting that Mr. Griffin plans to put the Stegosaurus on display at a US museum. It is not his first rodeo. I don't know whether you say that about dinosaurs, but it certainly is not his first venture around dinosaurs. In 2018, Mr. Griffin gave $16.5 million US to the Field Museum in Chicago to fund the display of a cast of the biggest dinosaur ever discovered, which is an Argentine herbivore known as a titanosaur. I'd never heard of that one. The specimen sold this week was discovered in a town called Dinosaur in Colorado. It's actually near one of the national dinosaur parks there. There's about 800 sites around the area, hence the name Dinosaur. There's only about 200 people in that town. The skeleton is mostly intact. The stegosaurus is believed to have lived to an advanced age, and it's actually showing signs of arthritis. There you go.
How did they determine from a fossil whether it's shown signs of arthritis? That's remarkable.
It's incredible.
Absolutely remarkable.
Totally remarkable. Yep.
Okay, up next is the Fear and Greed Daily interview with John Howie. He is the CEO of Stake.
All about what people are investing in. Fascinating chat with John. Well worth listening to that one.
That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you very much, Julian.
It's Friday, the 19th of July, 2024. Make sure you're following the podcast. Join us on LinkedIn, Instagram, X, TikTok, and Facebook. Have a great day.